we're not far from the all-time high because there's an expectation in the market that Trump has got to do a trade deal, that he cannot let this, as the re-election is coming up, stock market's got to be higher a year from now than it is right now if he wants to really have a good chance, I think, in this election. Listen, we had a trade deal with Europe. We had a trade deal with Mexico and Canada. And there was an expectation we're going to get a trade deal now. So I think the reason we're only 3-4% down is I still think there's like 80%, 90% expectation we're going to get a deal. But every day, every week that it doesn't happen puts a little bit more uncertainty onto that probability.
So what do you do if you're sort of a medium to long-term investor, Jeremy? Do you just sort of wait it out, the turbulence, and hope, as you say, that the president wants to see a higher stock market into the election? Or are there certain moves you'd be making?
Well, I'm not too much of a short-term trader. I still think there's good, solid, long-term values there that are now, again, being affected. How much short-term downturn? I mean, stocks are only still trading 18, 19 times earnings. Listen, we've been talking about the interest rate. And by the way, that is definitely a worry, this inversion of the curve. I've been on record here on CNBC saying that the Fed's last rate hike was a mistake. They should be thinking of lowering it into the future, and maybe the data will force their hand to do that. That's really very, very contrary to what, has been the mode this year. But those interest rate trends are something I think are a short-term worry for the economy and the markets.